Hey Forex Kings, just Tony here. Firstly, just a huge congratulations to everyone trading this week. Had pushing a record week really, or a couple of days. Just going to go through some of the trade setups that we've all closed off. So before we get into things, guys, make sure you've joined our Telegram channel. A lot of content coming out here. Make sure you have your notifications turned on as well. We are posting quite a lot of content on here as well. So yesterday we closed off Euro USD plus 90 pips, Euro Aussie plus 140, NZD Yen plus 100. This morning we closed off 125 pips roughly on NZD USD. We're now running SP500, which is about plus 30-40 pips, and the AUDNZD, which is about minus 30 at the moment. So I'm going to cover that trade setup in a second. But yeah, massive well done, guys. Almost a record week, pushing almost 500 pips, which is just ridiculous. So well done, everyone. I'll put the link to Telegram below this webinar. So if you haven't joined our Telegram channel, please make sure you do so. Now, today's webinar is going to be on kind of the current market climate and what we're going to be focusing our trading on over the coming weeks. So essentially today we see the Australian unemployment data come out, which is actually pretty good. However, keep in mind that the data was actually based before the quarantine and social distancing rules came in. So it is kind of not a true reflection of the economy at the moment. So we are expecting this to get a lot worse in next month's reading. Now, going through the calendar, just to keep an eye out today, we've got some more jobless claims coming from the US. Last week, we saw 6.6 million jobless claims. They're expecting a slight reduction there this week. So we'll see how that goes. Now, initially, you'll think, a negative result for the US would mean a weaker US dollar. However, that's not been the case. Last night, US retail sales came out about minus 8.7%. Now, that actually strengthened the US dollar and weakened the Aussie and New Zealand because it is kind of reflecting a potential recession that is oncoming. So any major negative results to the US should initially, obviously, weaken the US dollar. However, it's having the opposite effect because the US dollar is the global currency, and many traders and investors want to hold US dollars during any recession. Okay, so do keep that in mind. Tonight we'll see some more initial jobless claims and building permits as well. So negative results there could actually have a strengthening impact on the US dollar. So do keep that in mind. And obviously, any recession indicators will hit commodity-related currencies hard, so AUD and NZD as well. Now, going through the calendar as well, tomorrow we've got China's GDP, some big misses on the forecast there, or some negative readings on the forecast there, minus 9.9% for quarter on quarter and minus 6.5% year on year. China are known for not fudging their numbers, but skewing their numbers. So I'm not expecting them to come in massively under this forecast. They could actually have quite a good result. Also keep in mind that what some countries like to do is put a massive forecast, so a huge loss on the forecast, and then beat that forecast. So it actually appears to be a good result, but it's actually still a negative result. So any GDP of minus 8, minus 7, minus 6% is still going to be a massive decline there for China. So that could have an impact on the Australian dollar. It could also have an impact on the US dollar as well, so and indices. So we're going to cover those in a second on the charts. Now, going through as well, a bit of data coming from the Eurozone. We're not really going to focus on that, so we're kind of tying our trading up for the week. But next week, we've also got some more trades surrounding the Australian dollar. So we have RBA's announcement. We're going to skip the pound. The pound is very, very lively. I'm not a big trader of the pound myself, so we'll leave those ones alone. We've got some data coming out from Canada, some more from Australia as well. The euro could be a focus next week as well. Manufacturing data is being hit hard. Looking at their manufacturing PMI, it is in recession, guys. So the EU is in recession. Manufacturing-wise, it's below the 50 and the 45 level, which does indicate recessions. So the euro could be a good short next week if we do get a big miss on these forecasts. So we're going to be looking at trading the euro next week. Also similar in the US, some manufacturing data in the US as well. So yeah, this is kind of how I plan my week trading wise. So I kind of know which currencies I'm going to be focusing on that week. Now, just going through kind of the calendar there, so you know what's going to be happening next week. I'm just going to touch on the current kind of global climate and what's actually happening in the economy. Now, at the moment, it is earnings season in the US. Okay, so this could be why the US indices are having a bit of pressure at the moment. A lot of companies are taking some big losses, and it's only quarter one. We're probably not going to see the main damage until Q2. which is kind of when we see the big results coming. But Goldman Sachs has already, suggested they've lost 46% of profits. So, a big player there in the US. This could be a sign of things to come in the economy. So do keep an eye on the earnings calendar. There are some big companies reporting their earnings over the coming weeks, so that could put pressure on the US stock market. Now, something to keep in mind as well is the US 10-year to 3-month yield curve. We can see it's accelerating higher. Every time it has done that previously, there has been a recession. So, following this trend, this has a 100% track record as well. So following this trend, a recession is inevitable here. We feel, it is probably coming at the moment. So the current decline on the US stock market may just be the tip of the iceberg. Okay, so we are expecting this to continue higher, and that's when the acceleration of the yield curve higher. That's when a recession obviously comes to fruition. Now, another thing to keep an eye on is the unemployment rate. We're expecting the unemployment rate to skyrocket. It has been forecast to increase over the coming months as well. Depends how long the coronavirus happens, but in the US, the coronavirus isn't being contained at the moment, so we are expecting the lockdowns to continue. You can see here there's been a massive spike in unemployment already. Now, unemployment is a backwards-looking indicator, okay? So it is, it's not kind of what's happening right now. It is backwards-looking, but you can see every time there's been a huge spike higher, these grey areas are recessions as well. So these indicators are suggesting we are heading towards a recession. So we're going to go through the charts and have a look at potentially how to read the charts, how to trade the news events as well coming up. We're firstly going to focus on the SP 500. Now, I've been using a lot of Elliott waves theory, which has been working well for our trading floor members. Now, you can see here we've had a 5-wave structure lower. Okay, so we've had a 5th wave that ended around 2,152. So generally speaking, on a 5-wave structure, wave 3 should end around the 161% fib extension, roughly. Okay, not to the exact pip, but generally around that level. Now, the way you would calculate that is you get your fib retracement. You go from wave 1 all the way to wave 2, okay? Sorry, from wave 1 all the way up to where the wave started. And you can see wave 3 just extended beyond the 161 extension there, okay? Now, generally speaking, waves 4 and waves 1 do not cross as well. So that does confirm that Elliott waves pattern there. We've then had the 5th wave down, which then finished below the 3rd wave. After a 5-wave structure, that is labeled wave 1, okay? So wave 1 is made up of 5 subwaves, okay? And you can even go down to a minor degree as well. So there's even smaller waves within those 5 waves as well. You've then had a ABC correction to form wave 2. Now, something to keep in mind on is just beneath these ABC corrections, there's also a subdivision. So wave A and wave C are made up of 5 subwaves. Wave B is made up of 3 subwaves as well, which has happened. So I'll let you guys go down and do that yourselves. Now, if this is a 5-wave structure lower, and we've only had waves 1 and wave 2, that does suggest we could be setting up for a long wave 3 extension. Now, based on this data and the yield curve, it could potentially occur. So the fundamentals do kind of support. I'm not saying we are going to definitely see that, but a structure we need to keep an eye on is this wedge formation. If we do get a break of this wedge formation, it could just be the start of a mass selling. If we go to the weekly charts, and I'm just going to zoom in a fraction here. If we get our fib extension and go from where wave 1 finishes all the way up to where wave 1 starts, okay, we're then going to get a 161 extension. Okay, we're now going to zoom out on the charts. So the 161 extension is generally where wave 3 ends. So if that does happen, we could be looking at 1,376, which is just over, it's about a 60% correction from the record highs, which tends to happen during a recession or a market crash. Now, if you go back to 2008, we had a very similar structure, okay? So we had a 5-wave structure lower to form wave 1. We had a ABC correction to form wave 2. We then had a 5-wave structure to form wave 3, which finished roughly in line with the 161 extension. Just beyond that, we then had an ABC correction higher. We then had a 5-wave structure lower to finish the 5 waves. Okay, so we've had a 5-wave in total, and each 5 waves are then divided up into sub-waves as well. Okay, so this could just be the start. This drop off here could just be the start of a further decline. Obviously, if profit warnings going into Q2 get even worse, and obviously unemployment, if that keeps skyrocketing, if the yield curve continues pushing higher as well, the signals are there for further downside in the market. So do keep that in mind. Now, we're going to use some more Elliott Waves theory. A lot of us are on the AUDNZD. We've been shorting this one. We're just waiting for a break of this trend line. Now, a bit of education here, guys. On the Elliott Waves theory, you can get a fifth wave extension. Okay, so what that means is you'll have a wave 1, 2, 3, and 4. Waves 1 and 3 are very similar in length. You then have a 1, 2, 3, 4, 5 intermediate degree, so that's a smaller subwave. And then from the final leg, you also have a 5-wave structure as well. Now, essentially, this will be found down on the 15-minute candles, possibly the hourly candles, the minor degree ones. The intermediate ones can be found in the 4-hourly candles and daily candles for the primary degree waves. Okay, so we're going to focus on the primary and the intermediate degree waves. And we're going to have a look at the AUDNZD. Just checking here now, we have had a sort of 1, 2, 3, 4 sort of structure. Waves 1 and waves 3 are very similar in length, and waves 5 is very, very impulsive. We can also see wave 5 is also made up of 1, 2, 3, 4, 5 subwaves, which then accounts for the intermediate waves. Okay, you can then go down to the 15-minute candles and actually have a look at wave 5 here. There'll also be some smaller waves built up in there as well. So based on Elliott Waves theory, it's just about where wave 5 ends. Okay, this does look very similar to an Elliott Wave fifth wave extension, so we are expecting a potential drawdown or drop down from this level. It does suggest you can target wave 3. Okay, so we could be looking at 1.0350, which is roughly about 200 pips if we do get a break of that sort of trend line coming down here as well, guys. So that's the AUDNZD as well. Now, what fundamentals are coming up next week to support that? Obviously, some more data, tomorrow from China, GDP data. If that comes in bad, that could cause some pressure on the Aussie. You've also got some data coming from the US tonight as well, some jobless claims. If that comes out negative, we could hear some more recession indicators flashing red. So there are some, fundamental data points that are coming out to support a sell position on the AUD as well, guys. So that's the AUD, NZD, and the SP 500. These are the positions that we're kind of concentrating in the trading for at the moment. So well done, guys, this week. Any more comments or questions, any topics you want me to cover, please comment below. Drop us a like if you enjoyed the video, and don't forget to subscribe to the channel as well, guys. Thanks for listening. We'll catch you all in the trading floor.